All right, let's talk about SoFi Technologies. You've probably seen it all over the place, the incredible rally and then that shocking drop that just left everyone scratching their heads. So what we're going to do here is cut through all that noise and figure out what the charts are actually telling us.
And this really is the perfect place to start. There's just so much passion, so much emotion tied up in this stock. But our goal today, it's to set all of that aside. We're going to take a fresh, rational look based purely on what the price action is showing us.
I mean, this is the heart of the issue, right? The stock looked like it was on a rocket ship, ready to break out to new highs, poised for a huge run. And then, bam! In a single day, a huge chunk of those gains just vanished, leaving a lot of people feeling totally whiplashed. So that's the big question we're going to tackle. By breaking down the key patterns, the support levels, and the big warning signs, we can piece together the story behind all this volatility and maybe get a clue about what's coming next.
Okay, so to really understand what's happening right now, we've actually got to rewind a bit. The whole setup for today's drama was built over the last 6 months, and it all started with a pretty classic trend.
All right, let's break this down piece by piece. It all kicks off back in April. The market's finding a bottom, and SoFi carves out this really clear rising trend line. Now watch what happens in May and June. It comes down, it tests that line, and it holds. That's a huge confirmation for chart watchers. It tells you the trend is legit. From there, the stock just takes off. I mean, it just rallies for months, way above that line. But trends always get tested, right? So in November, the price comes all the way back down, tags that trend line again, and you get this picture-perfect technical bounce. But here's the problem. It bounced right back up to its old high, and it just stopped. This created what traders call a double top, and that's a classic, often bearish, sign that a trend might be reversing.
So after that double top, the stock did exactly what you'd think it would do. It broke below a really key support level right around 2580. Now at this point, it looked like the bearish pattern was confirmed. It looked like SoFi was headed way, way lower.
And this is just a brilliant example of how tricky the market can be. Instead of collapsing, the stock staged this massive reversal. It's a classic bear trap or a fake out, something you see a lot in strong bull markets. It faked out the sellers just enough to get them to short the stock, only to rip higher and just completely crush their position.
So that huge rally brings us right into the new year, where everything looked incredibly bullish, right before the floor completely fell out from under it.
So coming into January, the technical picture looked amazing. A new, more sustainable rising trend line had formed. The stock busted right through the declining resistance that was holding it down since those November highs. The very first trading day of the year was the big breakout, and the Monday after that confirmed it with more buying. It looked like all systems were go for a major rally.
And then this happened. Just a massive, sudden sell-off that completely wiped out all that bullish momentum. If you were a trader who just bought into that breakout, it was a total shock, a true rug pull.
And that reversal has left the chart looking, well, messy. It's a really conflicting picture now. You've got solid arguments for both the bulls and the bears, and it's created a real tug of war.
Now what's so fascinating here is how this lays out the battleground. Okay, so in the bulls corner, despite that crazy drop, SoFi did manage to close right on its new rising trend line and above that old resistance. It held key support. Plus, the whole financial sector, the XLF, is still looking really strong, which should be a tailwind. But then you look at the bear side. You just can't ignore how violent that reversal was, or the fact that it happened on really, really heavy volume. Heavy volume on a big down day, that suggests sellers have a lot of conviction, and that is a major red flag.
So with all this uncertainty, how in the world does a trader approach a situation like this? Well, there's actually a pretty simple, disciplined 3-step rule for looking at a potential bounce play.
So here's the crucial part. We've already seen the first 2 steps. The stock came down and did the test of that rising trend line. Check. And, for now at least, we've seen the hold. It closed right at that support level. Check. But we're still missing the most important piece of the puzzle, the bounce. We need to see buyers step in the next day to prove that this level is really being defended and that the trend is still alive.
And this brings us to what is, without a doubt, the single most important idea when you're dealing with a volatile stock like SoFi. You've got to manage your risk. A lot of people are trading this with no plan at all.
This is everything. A stop loss is basically your escape hatch. It means you know exactly where you're getting out before you even get in. It takes all the emotion, all the guesswork out of the equation. If the price crosses your predetermined red line, you're out. No questions asked.
So where is that red line for SoFi? Well, looking at the chart, the one critical price level that has been major support time and time again is right around the $25 mark.
This is the level that the bulls absolutely have to see hold. If the stock breaks hard below $25, and this is important, closes the day below it, that would be a huge technical warning sign that the uptrend has failed and lower prices are probably on the way.
And I really want you to let this quote sink in. Long-term success in trading isn't about hitting one giant home run. But failure? Failure can almost always be traced back to one or two trades where someone just refused to take a small loss, let it get completely out of control, and blew up their entire account. That's why having that red line and honoring your stop loss is completely non-negotiable.
So that's where we stand. The chart is at a huge inflection point. Is this rug pull the start of a new, major topping pattern that's going to send the stock lower? Or is this just a violent shakeout before the next leg of a rally back towards the 30s? The answer is probably going to be revealed by whether or not buyers can step up and defend that key $25 level.